Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome back for another amazing episode of Bullish and Beyond. And we have an incredible guest today, Lars Soreide. He is a Florida attorney since 2008, and he works in the field that we're talking about. He's a securities lawyer. I bet he has some absolutely crazy fraud stories he's going to tell us about, so stay tuned for that. And besides that, oh, wow, the market is on a rip. We hit a record high 3 days this week. And Bitcoin at 111 the other day. Wow, things are popping, looking good. Your portfolios are probably crushing it out there. I know our picks have been killing it. So let's get into it. So Lars, welcome to the show.
Well, thank you for having me, Brian. Always a pleasure.
So I know you've been a lawyer now for 17 years, handled over 700 cases, and recovered over $50 million. That is impressive work for your clients.
I know it's been a real long run. I started in my own firm in April 2009. So if you had to choose the exact month and year to start a claimant's practice suing stockbrokers, April 2009 would have been the best time to start that practice in the last 100 years. So I would say that was a lot of luck, a lot of good timing on my part, and seeing an opportunity and taking it and going out on my own right away. And yeah, I mean, a lot has changed over 17 years. I mean, I used to get 20, 30 phone calls a week, and out of those 20 phone calls, 19 of them would have a full service traditional broker, someone managing their money. Now I get 20 phone calls in a week, and probably 15 of them are managing their own money. People calling who made mistakes on their Robinhood app, or
no, you can't get money back if you made a bad trade on crypto on Robinhood. That's not how it works.
There's some instances where we've actually been successful in pursuing self-directed trading platforms like that, because I mean they do owe you the duty of best execution, and sometimes things can happen where orders aren't processed correctly, but there's very few cases.
Interesting.
Very
few
cases.
If I have an order in, I technically had an issue the other day I shared in the podcast with an IPO, and I had a price in, and then I got leapfrogged, before it filled. I don't know if there's anything there. I'm not trying to sue or anything, to be clear, but is that a scenario where there would be maybe an issue with the self-directed platform?
It's possible, but those cases are virtually impossible to prove because you have to reconstruct the order flow. So really what I do in my line of work, what I look for is a situation where you have a guy, you have a girl, you have someone managing your money, giving you advice, because it's an act of recommendation that carries liability. So if no one's telling you to do anything, then there's no liability. I mean, they're just, all these self-directed accounts are really just providing you sort of a platform for you to do it yourself. So I look for cases where people relied on a recommendation, and in a lot of instances that it's likely an unsuitable recommendation for the customer, which resulted in losses. And then and not everyone has a case. I mean, a market loss is not a case, so it has to be something outside of just a regular market loss. Right. So overly concentrated positions, where we see brokers going in.
I'm overly concentrated in Apple, but I'm happy that I'm overly concentrated.
Well, you're not my typical client. My typical clients are generally probably 60 plus, retired, looking to preserve their assets. So you know what they say, concentration is how you get rich, diversification is how you stay rich. So thank
God I'm diversifying.
I have grandma and all tech stocks. That's a problem. You know what I mean? Or you see a lot of churning and this is actually kind of an interesting thing that comes up quite a bit. Something that your listeners might want to pick up on and look into themselves.
Yeah, dive in.
So I get a lot of churning cases. So churning is when there's a lot of trading. So a lot of people will look at their order confirmations and say, oh, my broker's not so bad. He's charging me $25 a trade. That seems pretty reasonable, for getting a guy to do it for me. But then if you look at the fine print on the order confirmation, it'll say in very, very fine print on the bottom, we make a market in this security. And our markup or markdown is, say, like 0.50. So let's just say you bought 1,000 shares and you're paying 50 cents a share markup or markdown. Well, you just paid them $500. So
Wow.
that's not on the ticket. So sometimes I'll get calls and someone will, let's say, have 300 grand at a firm, and they're very active with their trading, and then they're like, the market's been going up, but my account keeps going down. I'm at 150,000. How
That
am I?
seems odd.
So we'll do a forensic analysis. We'll
Wow.
get all the order confirmations, the commission runs from the brokerage firm, and then I'll be like, listen, you just paid 150,000 in commission. Like your break even was like 25%
Wow.
annualized. There's no way you can make money on these accounts. So I love
That's
churning
wild.
cases. Churning cases are my favorite cases to try because it's straight math. I can show the cost to equity ratio. Like, you have
Yeah.
to basically make 25% to break even. And this is what the commissions are. And it's offensive, and it's numbers, and it's not, oh,
So
this was
it's
appropriate for me.
it's so obvious. That's like a
Yeah.
scam, legal scam,
Oh,
or if you want to call it.
absolutely. I mean, you're seeing probably a little bit less of that. That's sort of falling by the wayside because a lot of people now are going to managed money. So, they're charging, 1%.
1%.
And
Yeah.
they're putting you in a basket of ETFs, and you're getting a market return. So there's actually something called reverse churning, where these registered investment advisors or brokerage firms, they put you into an account and charge you, say, 2% and do nothing. So you're paying
Wow.
2% over year after year after year after year, and the account's
Yeah.
just stagnant. So there's actually claims you can technically make for reverse churning. So doing the
Interesting.
opposite, doing nothing with the money and paying through the roof in commission. But
I have a question. So if the
Oh.
broker knows that his firm has a market in the security, do they have to disclose that to you before they allow you to trade it or recommend it?
verbally, no, it's on the order ticket. So it'll say on the confirm, like, we make a market, we don't make a market, and it'll say solicited, meaning the broker asks you to make the trade, or unsolicited, meaning you ask the broker
Yes.
to make a trade. So a lot of bad brokers are doing things they shouldn't be doing. A lot of times they mark a lot of the trades unsolicited, so that way they can say, like, if anything ever arises, like a dispute, they can say, well, it's all marked unsolicited, and you got the order confirmation, so this was your idea, so why are you bringing a case against me?
I know my wealth manager, he has to mark things unsolicited, that the firm like can't recommend like any crypto, like IBIT, for example, or ETH. He literally can't, like, he's not allowed to market solicited.
Yeah, no, that's actually an interesting point, because the crypto funds that came out, they really were kind of not so much sold by the brokers. There were clients asking the brokers to sell it to them, so they had to mark those unsolicited. They wanted it. I don't think there's too
Yeah.
many brokers that were pushing it, but yeah, I mean, now that
JT's
I mean,
pushing
that's
it though.
the
He's got a crypto
yeah.
fund.
Well, hold on.
okay,
That's exactly how it works. I work with advisors who have client interest. That's part of my distribution channel. So I really wouldn't know how that would be classified, but I meet advisors. They say they have clients that want interest in crypto, and then my fund is one of those products that they bring to the table for the client, and ultimately the client decides if that's something they'd want to do or not.
yeah, and listen,
That
and a lot of people don't realize, like, you can do that. Like, you can it's your money. So if the client wants to be into crypto, like, you have to find them an avenue to crypto. You
Yeah.
give them a CYA letter that says, hey, look, I'm not recommending this. This is your idea. This is unsolicited. This is high risk, and you should be allowed to do what you want with your money when you want to do it.
It seems like it's more of the brokerage. Like my wealth guy isn't like anti Bitcoin, but he's like, I think it's like literally the firm is not legally allowed to recommend it. Like at this point in time, I'm a little surprised with all those crypto laws coming out and whatnot that there isn't more legality around recommending it at this point.
It's just a firm by firm decision on what sort of risk
Okay.
appetite they want to take, because it's so volatile. They don't want to have a 40% downdraft
It
and be
is
caught with a
quite
bunch
volatile.
of cases.
We talk about that all
Yeah,
the time. If I have a stock that has a big swing, JT's like, "Oh, that was like a crypto swing." It happens
Yeah.
constantly.
It's the rough waters, that's for sure. Um, I mean, a lot of the regulations have not been passed too. I know for my fund, I cannot get on Fidelity or Schwab because they have incredible requirements, and it creates a lot of, I would say, a barrier to entry, if nothing else, just people's opinions on the asset class in general. Schwab straight up said we don't allow crypto, and they're like the largest custodian.
Yeah,
So
that puts you in a good position though, because then people will come to the hedge fund and get off of the brokerage firm platform
Yeah,
and
that's a
let
good
you do
point.
your thing. And especially, I
yeah,
mean, and when you're talking about crypto, I mean, crypto isn't just Bitcoin and Ethereum. I mean, there's hundreds and hundreds of
right.
cryptos that people trade, and even though some of this is tradable on some of these platforms, I mean, if you want to own Pepe Coin, you're not going to be buying that through Morgan Stanley.
Right.
You know what I mean? It's
You
Right.
better go on
Right.
Robinhood. Yeah.
Right. And then, I mean, as a hedge fund, you're free to do what you want. I mean, as long as they understand that there's an incredible amount of risk involved and, that
Do,
it
do you have
can,
any do you have any Pepe coin in your fund, JT?
No, no, we do
you love
not.
it.
We do not invest in meme coins. In fact, my channel, 30% of the time is just shitting on meme
I
coins.
know.
And I bet Lars and I see them similarly, where fraud is rampant in them. Um,
Yeah.
we went from 1.2 million circulating tokens to 23 million in the past 18 months. That means anywhere from 10 to 50,000 tokens are being made a day, and
Well, if you can make them on
they,
pump.fun in 5 minutes, I mean, I guess that's probably
yeah,
why.
that is
Well, I think
why
that's
there's,
thinly traded. You can manipulate it. So that's the thing. So you have a
Yeah.
lot of supply
right.
is controlled by a few actors. It's thinly traded. They pump it to the moon and then they rug you. I mean,
Yeah.
it's basically money with it's musical chairs with money.
If you
It's
Yeah.
get
And the
rugged, is
success,
there anything you can do legally?
No,
I
no,
think,
God, no, because it is,
I,
it
I,
is. I mean, if you're buying Pepe coin and you lose money, I mean, one, I'm not sure who you would sue, and two, it's like if you didn't know the risk there, then shame on you. Definitely buyer beware on those.
I agree that buyer
and
beware. I just didn't know if like a pump.fun could ever be held liable or something like that.
It's just really not my world. I'm still kind of just doing the
yeah, I,
traditional stocks and bonds,
Okay.
back products sold by the Morgan Stanleys, Wells Fargo's, Merrill Lynch's of the world. That's still keeping me busy. It's not a huge area, believe it or not. I mean, there's only probably about 2,500 FINRA arbitrations filed nationwide every single year. But it's nice because I can pull those cases from any state. You just have to be licensed in one state because
Okay.
FINRA, the Financial Industry Regulatory Authority, they provide you a nationwide forum. So I can just as easily scoop up a case in Massachusetts as I can in Florida.
Anywhere.
Yeah.
Where does most of your business come from?
Well, I would say about half is Florida. I mean, people
Okay.
still, it's funny. People want to hire someone local and then they want to meet you on Zoom and they never see you anyway. So they do have a local bias. They just like to know that you're near. I guess that makes some people feel comfortable, but
I think on Google too, when you're searching, I think it populates local people first. And you also have a great domain name.
yeah,
Tell
securitieslawyer.com. Yeah,
yes.
securitieslawyer.com. Pretty,
that's pretty good.
pretty on the nose.
I
I
mean
actually
the
bought.
SEO for that is just about as good as my website, Sell Your Mac. I mean, it's it hits you right in the face when you know exactly what you do.
I was very lucky to get that. I found a broker who was squatting on that name for many, many years, and he was trying to sell it for many years, and then eventually he just let it go to me for 10 grand. I think around like, God, I think I might have bought that in like 2013 or
That
20.
was a steal.
Yeah, I think it's it's funny. Google doesn't rank stuff as much as they used to based off domain authority. It's really kind of like that used to mean a lot back in the day. Like, if you want to show for securities lawyer, if you had securitieslawyer.com, that was like the way to
If
get
you if
there.
you want help for ranking, I got a lot of tricks in my toolbox, so we can
I'm
talk more
sure you
about
do.
that.
Well, you are the Mac man. So I mean, obviously you know how to show on the internet. But
I mean, we
yeah,
can
it's
get
funny.
ChatGPT to spin up a lot more articles about you daily, and we'll just pump them out there. So
Well, that's how we find our cases. Is we deep dive the FINRA's disciplinary kind of database, and we actively blog about ongoing cases, filed cases against brokers, and then people might look up their broker to see what's going on with their financial advisor, and boom, our article might come up that might be,
Yeah.
reporting on something that happened recently they may not be aware of, and then they'll give us a call typically. But yeah, I mean, people aren't usually searching for their brokers unless there's a problem to begin with. So, but I mean, most people don't know this, but you can actually
Right.
look up your broker on FINRA Broker Check. It's a really useful
Uh-huh.
tool. And I think no one should do business with a financial advisor without at least pulling them up on Broker Check and seeing their discipline history. I mean, once you have more than like three
That seems pretty
complaints,
relevant. I mean, you're gonna
yeah,
give
and no one
someone
ever
your entire
checks.
life savings and not even look into it. I mean, we're not talking about like hiring a landscaper or someone to mow your lawn or something. And this is your
Yeah,
investment.
Right.
you would think, but almost universally that never happens because usually people make their connections with their broker generally through other friends or family, so they get to know them on a personal level, and they just like them personally, but they don't really know how they are professionally, and they never take the time to look them up. And like when they
So
finally do,
where do you go to look? Tell people, where do you go to look it up?
yeah, so finra.org, FINRA.org, and right on their homepage there's a broker check tool. There's a link on it,
Okay.
and just put in your broker's name and city, and boom, they come right up, and you'll see any past discipline. So it shows any complaint that was filed against them that's for over $15,000 and that has not been expunged. So if a case is expunged, that means like someone sued, they probably won
Yeah.
that case, or they dropped it. Then they have to go through a process to get that mark off of which is their CRD, which is basically their public broker check. So then they
Okay.
can get it worked off. So I mean, if there's a bunch of blemishes on there, I would ask a few more questions and be a little more
I mean, I would
cautious.
just move on. If you have a bunch of if you got 3 strikes, I mean, find a broker that has 0.
Yeah, yeah.
Now,
No, and also, I
now
mean, put things in writing with your brokers. That's like one big annoyance for me is when clients want to sue and they have no evidence whatsoever of what was said. They don't document it. If you have a conversation with your broker about something specific you want done, just follow it up with an email, just so there's some sort of paper trail.
Yeah,
I mean, I just think that's just good practice when
I
you're doing
agree.
business and dealing with a lot of money. Just like
Any
put
big
things in writing.
business.
Exactly, any business, right? But brokers historically don't want anything in writing because if anything goes wrong, they don't want the trail. So it's like
hmm.
a lot of people tell me like, "Oh, I've never emailed my broker once. I've never texted my broker once. It's all over the phone." So
Oh.
some good
Now,
advice there
how
for your listeners.
common? Yeah, that is some serious gems. How common are innocuous situations like that? Like things that like brokers having blemishes on the check, and it's generally innocuous. Like it's not a big deal. Or is it common to find brokers that don't have any over a 30-year
Oh, it's
period?
it's
Or
it's more common to find them without any. I would say if you have three or more customer complaints, you're in the top 99th percentile of customer complaints. So that would be
got it?
so.
Okay,
Most people
okay,
don't
Not
complain.
going for that.
Yeah, and you would
yeah.
think that, I mean, even like lawyers too. I mean, I've been doing this 17 years. I have zero
Yeah,
complaints.
where can I look you up? I mean, I gotta check you
Florida
out. Make sure
Bar,
it's
floridabar.org. Yeah, floridabar.org. Look up lawyer. Yeah, people don't look up lawyers either. I mean, that's one thing I've also noticed is people don't look up lawyers on the local bar websites to see if there's any discipline history. So I mean, it's the same with any profession. I mean, you can look up doctors, medical doctors in Florida. You can do it through they have for every profession, CPAs. DBPR provides the same tool on their website, like
yeah.
look up tools.
Hmm.
So something to think about.
Good to know. Something I noticed that Bitcoin, even though it hit all-time high, MicroStrategies or strategy did not hit an all-time high. It was hovering right around 400, but before it got up to the 500 range. And Lars,
Yeah.
you're one of the guys I know who likes to trade in MicroStrategy. What are you doing with MicroStrategy these days?
MicroStrategy is an interesting concept, and you'll see Tom Lee just came out with sort of a similar concept for Ethereum. But yeah, they're just buying Bitcoin, and then they're leveraging, their shareholder base to buy more Bitcoin, selling out the money, coming up with interesting financial engineer products to get more money to buy more Bitcoin. I mean, it's an interesting trading vehicle because the options are like the options activity is incredible. I mean, you can sell,
Highly
the
volatile.
money calls, yeah, high vol, like super high options premium. I think
Is that strategy still working for you?
I mean, it's It's definitely risky because you're capping your upside, but now I'm going to lay off of selling a lot of covered calls on MicroStrategies because I think we're at the point now where it's going to take off.
Okay, good to
So
know.
I
I,
think
I,
I
I
think
would
we're
like
there.
that as a shareholder.
I'm not. This is not financial advice. I'm a lawyer. I'm not a stock
No, there's
trader.
there's no financial advice on
Yeah,
this
this is
entire episode. This
Never.
is just conversation.
if anything, it's probably really bad financial advice to buy MicroStrategy. It's incredibly volatile. But I kind of see it as if you look at the chart, it's been range bound. It's like a coiled spring, and I think it's just about to break out. And the thing is with MicroStrategies is it's never like a slow, gradual climb. It's going to happen quick, and it's going to happen immediately. Like everyone who's shorting, it's going to
Yeah.
cover. It's going to blow up. So you can't sell too many covered calls because you're really gonna kind
Lose
of
your position.
cut your nose off to spite your face. I mean, but I like to, yeah. I mean, I have a 440 that's set to expire on Friday. I think that probably gets called away from me, but I'm fine with it. But it's not the whole position, so yeah, that's one way to play it.
440. It's only, what is it at? 410 or something?
I think by next Friday it's probably going to be probably pretty close to that. If you look at
Right now it's
what
405.
Yeah, I think I could get there next week. I mean,
Okay.
I mean, my personal gut feeling is I think this thing probably sees 500 in the next month or two. You know,
Okay.
so
Talking about that option premium, I was looking at doing
That's
some Apple
interesting.
covered calls the other day. Just not really a great premium, I didn't think. I was looking at like a 205, 2010 range for this week, and then sure enough, I would have lost had I lost my shares had I done that because the stock went from 198 to 212 in a hurry.
I mean, there's nothing that says you can buy them back. You know what I mean? So yeah, you lose out on some of the upside, but like some of this, like an Apple stock doesn't pay any dividend. You know what I mean? They're not much of a dividend, so it's
Yeah,
a good
half
way
a
to kind
percent.
of. All right, so if you want to kind of enhance some of that, kind of make it almost turn it into almost like a dividend stock, it's one good way to do it.
But
But
to your point, if the stock is, Apple, I was thinking it was kind of range bound as well. So you limit that upside so much, and that's my concern. That if I, sell them out of the, do some covered calls, 6 months from now, and Apple ended up at 300 again or something. Well, we're in a bad place.
Well, I think you got to decide where you're willing to let it go. And also, I mean, it does kind of marry you
Yeah.
to stocks because if it's really going to be a covered call, you have to hold the stock the whole time. But if it's something like obviously you're gonna basically hold Apple forever. So I mean,
Yes. Forever.
you don't want to lose Apple at any level. I mean, you're the Mac man. You
Yeah.
have to hold Apple.
But
So
if I do lose it, I do have other great investments that I talk about here all the time. I want to put more money in Palantir and Nvidia and stuff like that. Nvidia hit a new high today. They were in the 160 range, and they were below 100 only a couple months ago. So I mean, it has
Crazy.
been a springboard.
oh yeah, no, everything is ripping right now, and that's why my phone's not ringing. So I need everything. I need everything to crash
As
so
soon as
everyone
it
wants to use
hits
their
a big
broker.
crash, all the clients start calling. They'll get ripped off.
Yeah, what's
Huh.
interesting is if you actually took the Dow and you mapped it on an XY axis, right? And you had the Dow and then you had FINRA new case filings suing brokers, they're actually exact inverse mirror images of each other.
Makes
Like
sense.
perfect inverse mirror images of each other. So that's why in 2009, 2010, there was like, I think 12,000 FINRA arbitrations filed. And last year, I think there was like 2,500. So, but
Wow.
everything comes in waves. There's always bad products that blow up. So we just went on like a crazy tear with filing a ton of GWG bond cases, which was, one example of a bond that blew up that was sold to thousands of investors through brokerage firms that I don't want to get into all the details of why they're good cases, but yeah, they were good cases. So like things like that pop up where we'll go through cycles. Like we went through like a big oil and gas, kind of like
If I buy an oil well and it goes
well,
kaplunk right away, can I sue them? What do we got?
well, you remember when oil and gas went negative, right? Like 2015, I think a barrel of oil they had to pay you to take it. So I mean, all the
That
old
doesn't even make sense. Like I mean, I understand technically it did, but it's like how is that actually possible?
that was back when interest rates were damn near zero. So it's like if anyone wanted any kind of decent yield, you had to buy MLPs or oil stocks. So then when the whole oil market got wiped out, we had a lot of retirees calling to sue their broker who over concentrated them in just oil exposure. So something like that would happen, and then that kind of carried us for years, just filing oil and gas cases. So I don't know
So
if the next shoe to drop.
are you an expert in oil investments now? Should we pick your brain about how to do some oil wells?
Well, not specifically oil wells, but I mean, I do have to follow everything as part of the job because people call all day long, want me to look into this, look into that. So it's constantly looking up different investments. But it's fun and
Okay.
I enjoy it. I mean, hey, I don't think if I wasn't a securities lawyer, I probably would have been a financial advisor. So I do enjoy looking up all this stuff and getting into.
I mean, we
people.
talk finance all the time. So
I know exactly. So
let's dig into the oil a little bit. I mean, is there places that we should look for good oil investments, knowing that what you know about the bad ones?
just buy a fund. I mean, if you get a comparable yield, it kind of spreads out the risk because there's a lot of
Okay.
mid-sized producers that where the marginal extraction cost of a barrel of oil is around like $50. So if oil ever crashes, they can't make money and they're the first to go bankrupt. So, I mean, just buy the household names where their balance sheets look like the GDP of a small country and you'll be fine. Or buy a Vanguard oil fund. And then that's the safest way
But
to
if
play
you
it.
buy the oil fund, correct me if I'm wrong, I don't think you get the write-off that you'd get when you invest directly into a well.
Oh, you're talking about, okay, so buying directly into those are more like
private markets.
those are tax shelter investments. Those are people that are really just kind of looking for the write-off. But yeah, if you make an investment directly into the
Good
an
write-offs, but
actual
tons of
oil well.
upside. It sounds like great cash flow from the, just the research that I've seen.
Well, mathematically, it's not a great investment because you got to look at the probability that they're going to strike oil. It's pretty low.
Interesting.
What if you're buying into a fund that already has production, as an example? You could get a cash flow return on that basis.
Yeah, I mean, a producing
I'm
fund.
actually analyzing a deal at the moment.
If a well is producing and you can invest in a producing well, you're going to certainly pay a pretty high premium for that. A lot of the deals that I see that come across my desk, 'cause I don't see anything good that ever happens. People only call me when there's a problem.
Right,
So
right.
these are oil exploration investments, and they never find anything. So it's like that's usually what I see a lot of.
Don't invest in exploration stage. That's what we're hearing. Invest when they've actually struck liquid gold.
Yeah, if they'll let you for sure. But I mean, I don't know how you get into a deal that's already throwing off cash flow like that. You must be paying like a super premium to get in. But again, if it's working out, I'm not hearing about it. So no one's calling me to tell me how good they're doing.
Can we talk about that oil deal that you're looking at, JT?
Yeah, from what I understand, it all depends on fund structure, right? So if it's an open-ended fund, they are consistently raising capital to buy production to spit off a cash flow product, if that makes sense. So it's ongoing production, or they'll buy in. They'll have a fund of funds model where they invest partially in a bunch of different productive sites alongside other operators, as another example, with the intent that if you're constantly growing the fund, you're going to constantly be able to provide those losses as you expand production on the lease. And also, you'll be trading barrels every day in the fund, so you'll be able to, give a return to the investors as a monthly disbursement. That's a deal I'm looking at right now where it's about 40% cash flow at the moment. At the current price of oil, it was 60 something in the 70s. Now it's down to the 50s. He's pulling out of the ground for 28 a barrel. He's got 5 sites. 2 are productive. The other 3 are flowing, but he hasn't sold yet. So it's like just now expanding from his initial raise. And then, so you get 40% cash, you get a 90% write-off. It's locked up perpetually, right? These wells, they'll spit out oil for 30 years. That's the gist of the deal, and it's a fund that's open at the moment. So you just buy in and get the existing production with production expanding over time.
Well, I hope you never call me about it. I hope it works
out. Yeah. Me too, brother. Me too.
Yeah.
I mean, I think the main incentive for a lot of these people that buy it as they're high income earners that are looking for tax breaks. Like I filed dozens of conservation easement cases. So you mentioned that I have a bunch of crazy stories, and this is one crazy story. So
Let's hear it. We're
conservation
ready.
easements are kind of a hot topic at the IRS right now. So a conservation easement is someone will set aside a land, like a piece of land, and then they'll, deed it like a park, like environmental, right?
Okay.
So the problem is that these promoters that are selling these conservation easements, they're valuing the land at about 20 times what it's actually worth. So everyone
Oh
could
wow.
get or in some really egregious cases that I've seen. So some people can get this enormous write-off because they're not buying it to make income or anything like that. They just really want it. They're just doing this conservation easement investment to get like 150% deduction on what they put in. But the problem is
Got
that
it.
the IRS has picked up like, well, this is like most of the time complete fraud, and they're cracking down on it left and right. So
It's like
once,
some marshland, and they act like it's worth some crazy
yeah,
amount.
yeah, I've seen some insane valuations, and so the IRS is taking issue with that, and they're coming back at the investors, and they're wanting obviously back taxes, interest, penalties, and so the brokers that sold it as, oh, it's a guaranteed 150% write off on your on your income. It definitely didn't
Don't
work out
if
well.
you hear that, you should probably run the other way because that sounds. I mean, if anyone says
Yeah,
that, it's kind of illegal, right? Like that doesn't make sense.
yeah. I mean, in my experience of seeing all the crazy stuff and all the bad investments and all the churning, all the fraud. I mean, the thing that I've actually seen like across the board that works is just buy like a low cost ETF and just forget you own it and just never sell it.
In those conservation cases, are you defending them ever?
No, well, no, we're bringing claims against the brokers who recommended it and didn't kind of explain, like, hey, look, this is kind of
Okay,
risky. You could get audited, you could get fined, you could be back taxes, but penalties, fines, So, yeah, normally we're never really looking at the investment itself. We're always looking at the brokers and brokers firms that recommended it, that because they're tasked with
got it.
they're the ones that are supposed to do the due diligence for you before they recommend
That's
it.
why you
So,
hire them.
exactly,
Is there a way we
exactly.
can tell if the broker's bad besides looking at the FINRA? Like, is just anything over the years that you can just give us as general knowledge? Something that they would say, like the 150% write off. That like screams to me like fraud.
Yeah, I mean, I also don't. There's a lot of firms that are very small out there, like very small. If you look, you can actually look up their
Like two
focus reports.
people.
Yeah, and they don't have insurance. You don't have to have insurance. So, I mean, there's good and bad brokers at every firm. So what I just tell people is, if you got to do business with someone, just do business with a firm big enough to pay you back if something goes wrong. You know. Because I can't tell you how many times we've been
That
pursuing
makes
firms
sense.
and they just go under, and there's no insurance, there's no assets. It's just they're done. They just fold up shop and go away.
I really would
Yeah,
love to hear from our
exciting.
listeners more what they like about our podcast, what they don't like, any recommendations, and we're very open to the feedback. I mean, our podcast is very unstructured, as anyone that's a regular listener would know. But if people are looking for things to be on your repeat each week or something they want to see like that, we'd love to hear about it. If they want an update on a certain
Absolutely.
stock or a certain hot topic each week, we'll give it to them. So
I could update everyone on what I was talking. Alt's not doing well. Link, I talked about it an episode or two ago. It is down, and Bitcoin's doing all-time highs. Basically, all the names that I love, I'm going through an Apple moment with you. Like super excited about all this tech, and
but they're
there's
not
no
moving.
interest. Yeah, they're too risky. They're too small. There's the risk is off in
I mean, the
crypto.
small
The alt
stuff
market
scares
is
me.
yet to
That's why
rally.
I would want to work with a hedge fund owner like yourself because you have the expertise. I don't know about these small marketable securities, coins. I had no idea if they're going to be good or not.
Yeah, exactly. So that's why we have fees, as Lars would say. We get paid for a service, and realistically, it's to do the research and know what we're buying is as good as it possibly can be. It's a constantly moving environment, so I am moving positions around as theses live and die. But generally, we are long. I'll wait 6 months to a couple years to see um, if I got it right, because the market's
Anything big
irrational.
changing right now? Any big fluctuations that you're trading in or out of, or
No, I mean, I'm really looking at getting a little bit more Tau. It's a name I haven't spoken about yet, but I've really been
TAO?
TAO, BitTensor. Yeah. It's a really cool concept. I'm just in the middle of the research of me trying to decide if I'm gonna put more in the high
Let's
level
talk it out.
concept.
Give us the research here.
So it is a layer one. It's in the business that Ethereum and Solana and Cosmos and Polkadot. It's a very saturated market. However, it's a layer one for AI agents. And they have built their blockchain and their software to work at the speed that agents work. It's supposed to be an agentic blockchain or an agentic database, if you will, that's
Okay.
distributed and all that stuff. And then on the layer one, for you to make your own thing,
You already got me hooked
you
at agent.
can, yeah, I know, it's pretty cool. If you wanted to make an agent that did accounting, or that replaced me as a fund manager, or Lars as a lawyer, instead of building an app and trying to get your data availability hooked up, your oracles and all that stuff through an app layer, you can just clone it and create a subnet
Okay.
and then do all the customizations down there. And the cool part is Tau, the token, is what is used for your token if you use the subnet, which is their version of an app chain. It would allow people to build businesses faster. It is a database that is aligned with agentic properties. And the token is a utility token that the agents would use for liquidity in covering their business bottom line and everything. Like their entire statement would be denominated in Tau. So it's a true
Okay.
utility token. It is a capped supply of 21 million and it has halving
Oh,
cycles.
same as Bitcoin.
So same as Bitcoin, which is a marketable tokenomic model, and it's actually arguably one of two that you could say genuinely works. So, I mean, the rest of them are. I mean, I guess
Is there
Solana's
any
pretty
moat around
proven.
that like, why can't we spin up AI agents that use anything else? Like, is there any reason that this would work that much better for an AI agent?
It's really up to the builder, and it's a moral question if you believe AI should be centralized or decentralized. So you kind of have to think about it that way. Is this an open source developer, right, or a developer that works at a large company? That would
I
be
think
where
both are
you.
relevant. I mean, Salesforce just said in their a recent announcement I saw the other day, like 40% of the work is now being done by AI at a company that big and successful. So,
Right. I guess what I'm saying is they are building their own engine with their own agent inside of their own
yeah,
company. The people that would use Tau are the people that are not at a company. They're the
independent.
entrepreneurs, the builders. Yeah, they're
Yeah.
they're AI developers that are trying to build a business. So I'm thinking in the scope that I invest in, I'm thinking about those people because they're going to need cheap frameworks to build agents.
Yep.
And from what I'm seeing, Tau is the cheapest way to spin up your own unique agent that you could sell subscription services to or
My
from.
one concern at a high level is that, let's say ChatGPT, OpenAI comes out with a competing product that they have this AI agent spins off and they have their own coin. I just saw OpenAI announce their new recording feature that basically is going to crush Otter and a bunch of these other companies that are doing these online recording bots that jump into these Zooms. They're just going to get just crushed. So if I would think a company like that, as they see opportunity and they obviously know AI agents are the future, that they could have a competing product that in theory could knock off some of these other smaller players as they just already have the market share.
Yeah. Yeah, that's absolutely a possibility or a risk. There's also a decent possibility that OpenAI would build their own subnet on Tau.
Well, there you go.
Maybe not the main, maybe not a main line of business, but they are an open sourced model. And open
Yeah.
source is actually, it's part of their mission and in their name. Um, I'm not saying their main line of business would be offered on a Tau subnet, but I would be shocked in the next few years if they're not playing with it to implement their own token due to how easy it is to spin something
I'm
up.
surprised they don't have their own
And
token. I mean, just the name alone. I mean, the company's that it's the largest private company in the world. I think right now it's over $300 billion. Like it just the amount
them in
of
SpaceX.
connections and users they have at this point. You'd think that they would have their own token.
Well, the stablecoin bill is just now getting passed. So I mean, the precedent for crypto in a
We're still early.
no one believes me, but we are. Like we're
I
still
know.
very early. When in doubt, zoom out. There could be
Yeah.
100 trillion on blockchains in the next 30 years. Maybe most people think sooner. I'm young and I'm conservative and patient, so inside of 30 years, if there's 100 trillion in blockchain.
What's the
You
total
know,
circulation in the world right now for investments?
3.4 trillion in crypto. That's it.
Okay.
And then there's 440 trillion allocated dollars globally.
Okay.
Um,
So we're talking
and
maybe
then
a
there's
maybe
one
a
point
30x from where we're at in 30 years. I mean, that doesn't seem crazy at all. I mean, just in
no,
general.
it's a CAGR of 18%. It's already doing 30%. So I mean, it'll slow down eventually.
If I had to guess, it'd probably actually go faster.
Right. And like most people that have been
Yeah.
in macro and been doing what I'm doing for a very long time suggest we could be there by 2040, 2035. Like their estimates are very, mainly because and I also believe this, and I've said this for a while now. I believe agents will be the primary customers of block space. So I think they're anticipating AI to accelerate the adoption of blockchains
Yes.
because can
100% agree.
a robot can a robot pass KYC AML?
What's that?
Like how know your customer, anti-money
Oh,
laundering. You have to
got it.
do they have a driver's license? Do they have an address? Do they have a
Maybe.
face for Face ID? Do they have a fingerprint? Like obviously no. So how are they going to get a bank account? Yeah, we have all these agents dealing with all this money all the time in crypto. You can spin up an agent on Pump.Fund, get it a Twitter, and it'll sell meme coins all day for you automatically.
I think they get it a
So
bank
it's like,
account. Maybe it's kind of like a business. You know, when we start an LLC and we get an EIN and then we can apply for bank accounts. Maybe it's similar like that. That if you want to have all these agents that have fiduciary responsibilities, that you have to register them as. I mean, maybe it's not called an LLC, but maybe there's an agent LLC type form.
maybe, but the cool part about blockchain being the database that you build an agent on top of would be you could offer a service that's like, hey, um, we make podcasters. So you go there, you pay 200 a month for someone to do this 24/7, 365 and build years of a
Yeah,
catalog of content
yeah,
for you, right? And you would never know it was crypto, and you could be paid in stable coins. Outside of that, like if the wallet was your bank account, that would have to be the deal. But if it was a company offering this, you would not be able to purchase a license for an agent without it behaving on their behalf, right? The liability would go back to them. But you could control your
yes,
own agents. You could federate your own agents in crypto where
yep.
you're not able to do so in another scenario.
I mean, I,
So
I love the idea of giving my agent a crypto wallet. I mean, like, all right, well, here's, $1,000 worth of coins, and go do some business for me. Go find some
yeah,
max. Go find some cool property I should buy. Whatever it is, and then they can trade amongst their other agents to get information and do stuff.
yeah. Mark Anderson did this on Twitter and he live tweeted the whole deal. You know,
Yeah,
he just gave money to an agent and said, "Make me money."
they gave him like 100,000 or
And
something, right?
yeah, yeah, make me money.
Yeah,
It was
it worked.
50,000 one Bitcoin. It was one Bitcoin. Yeah, and it worked. I mean, 800 million into a meme token in the next 4 months. Like, are you kidding me?
That's what happened.
So, yeah.
Wait,
Yeah,
what?
go to Goat.
Oh
Goat
my
the token.
God. Are you
Yeah,
kidding me?
the ramp up is insanity. Yeah. The meme of Goatsy. It's like an old
I
1980s.
love the
I
idea of
wouldn't.
that because as a human, our brains do work incredibly fast, but we can only physically move as so fast. Like my brain works faster than my fingers can type. But these
Correct.
agents, if they're moving at the speed of electricity, basically on,
Yep.
at the best server company in the world, running on some sweet NVIDIA chips. I mean, they can be doing these trades and research at virtually light speed. And so it's like,
Correct.
we can't compete with trying to figure out what coins are best and how to snipe these, risky coins compared to an agent. Like, man, this is
Crazy.
some crazy future we're talking about, man. If you can spin up an agent and have a company that spins up agents, I mean, insane.
Yeah. And the likelihood it's built on Tau is, maybe if there's a, right now, I feel
If there's a high
10
likelihood of it
like
being on
right.
Tau, I like Tau.
Tau started as an alpha, like a little sprinkle of alpha. And when I review my positions, because my research is about 10, 15 hours deep, so I understand the system, I understand the token, the network, the team. I don't have a ton of conviction on the business landscape yet. So I
Okay.
put in 25 bips. I reviewing my positions before the podcast. It is up like 150%. Okay. And its weight is almost at 1.25%. So it's outperforming most of my other alts, which I thought was interesting. And I
Okay.
want to know if I should be adding to the position or not. And I'm like in the middle of thinking about that and like trying to decide if I'm going to really hammer on and maybe get a 2 or 3% or maybe
Have
higher
you tried to do
position
your
in
business
Tau.
landscape research on ChatGPT, having it run some comparisons and reports for you?
I use docanalyzer.ai. It has the 4.0 mini model in there, I believe.
Okay. So
But what I
you
can
are
do is,
using ChatGPT in hindsight,
yeah,
yeah.
yeah, I can print a website, give it to it, or I can give it a PDF. I can really give it any material it can read, and then I can have a conversation about that material, and then it can source the internet, and give me links, and it shaves my research time down 10,
Okay.
15
So
hours
you're already
a
using AI
week
to do it.
easy. Yeah, come on.
I
I'm the
know.
tech guy. I mean, we're both tech
Of
guys.
course,
I
of
mean,
course.
I can't believe I'm alive for these things. Like I'm here, robots are here. It blows my mind. When I was a kid, I would watch sci-fi and I would just think how freaking cool a robot would be. And I literally every day work with robots now, and I'm kind of numb to it. I want more.
We had a great chat. I mean, we learned how to identify if our brokers are bad and how to check on them. We heard
Yes.
some of the crazy things going on right now and some of these crypto rug pulls and whatnot. So you definitely dropped some good expertise here.
Yeah, actually, no, that's the one thing I kind of wanted to kind of share with your listeners because I think it's the most relevant thing I have to tell your listeners because you guys have a big crypto audience, and that's the one call I get a lot that really is upsetting. It's a pretty common scam. It's the people open up a brokerage crypto account and they think they're doing business with people in the United States and they're just bad actors overseas and they're trading on their fictitious platforms and it looks like they're doing really well and making all these profits and they add more real money to it and they continue to do better and then they go to take their money out and they'll then tell them, well, actually you have to prepay your taxes, so send in more money so you can prepay your taxes so we can give you all of your profits. And
Because
of
that's
course,
how it works, right? You prepay online your taxes to some random company. Oh yeah, sure.
yeah, that's what people call and tell me. They're like, they ask me, they're like, is this how it works? I'm like, no, it's not how it works. It's just a scam. Stop. And you're not, no, they're not in New
Don't
York.
send
No,
them any more money.
don't send them
It's
any
too
more
late.
money. I think it's called,
Yeah,
like, what's it called? Like
a pig butchering
Pig
scam.
butcher.
pig butchering. That's right.
You
Just
gotta
fatten up
Yeah.
the pig.
slaughter those pigs.
Yep. Get them nice and fat and then slaughter them. So I would say to all your
Yeah.
listeners, if you find some interesting new AI based platform that helps trade crypto for you and it seems super easy and your account's just growing, nothing's growing. It's all fictitious. So just be really leery doing business with anyone that's not sort of like a household name when it comes to crypto and platforms. So
We were
100%.
It's really
talk
funny
about
because
that
we were talking about something similar of how we're having AI agents make these trades. So I mean, people are gonna have to be really cautious as those things come out and start doing more trading for us. That we're not giving an agent maybe more authority than they should have or something. I mean, in theory, you give an agent a bunch of money, they grow it, but then they send it to another agent and you don't get it back.
yeah, it's interesting to see how AI is utilized in finance. I think it's going to make obviously decisions faster and better than people can, and based off of larger data pools and
Unlimited data with instantaneous answers.
Yeah, I just don't know if people are going to be involved in the financial industry in the future. I think AI will probably make all the decisions for us of when to buy and when to sell. And if all the AI agents are sort of seeing the same thing, then of course they'll probably all make the same decisions simultaneously, and then it'll be sort of a self-fulfilling prophecy that they'll be right all the time because they'll be mirroring each other's trades.
That is interesting.
However, I feel like I agree with that long tail. There's always going to be someone responsible, I think. Like,
yeah, no doubt.
Fidelity might go from 500,000 to 500 people, but like, it's still Fidelity. They're still responsible. It's just the robots are doing most of the work. Like I think firms are going to stand that test of time. I don't know if people will. They're workers and employees, but I feel like you still need like the agent that does that stuff for you. It's going to be licensed by someone that is responsible for your capital.
Oh,
Someone or
absolutely.
something you can take to a court.
Yeah, no, if someone like a Schwab or Fidelity puts out an AI trading tool like that and there's a glitch in their software and it tanks, like, yeah, there's probably going to be some cases.
Call you and we're going to sue them.
Possibly, yes. That's the plan.
Can you imagine suing an agent and not a broker?
Well, like JT said, there's always, this is written by people. This is coded by people. So really, right. I mean, it's the
company
at the firm level.
Responsible.
Yeah, someone is ultimately responsible. I mean, you trace it back, and eventually it's the firm's responsibility, and they have to market it correctly. They can't overstate what it's going to do for you, or minimize the risks.
I could see you're talking about those when the companies are doing like tons of trading super quickly. I could see an AI agent just racking up the trading bill, like going. I mean, it can make a trade every 100th of a second or something. I don't know.
Every 100 milliseconds on Solana
now. One day later, you have like a $100,000 bill of order execution.
Well, that's why you want to pay a management fee, because they're not going to charge you per trade.
Yeah, though I agree, but I could see how you could be hiring a broker and not realize that some AI agent just goes bonkers and you get your bill the next month and you lost half your money just to order execution.
Well, I haven't seen that yet, but I'm sure that'll come at some point.
The AI agents 100%. Are just getting out there. I mean, we're at the infancy. I think 2 years from now we're gonna have AI agents doing most of the mundane tasks in our life and work. You're not going to have to think about writing a blog anymore. You're just going to talk to your AI agent and it's going to go do the work for you and it'll report back with 20 blogs every hour.
Yeah, we're already kind of utilizing some AI in some of the writing that we're doing for the, on some of the blog posts, but you have to actually really check it carefully because sometimes they get something horribly wrong. But
you're going to have 5 agents. The one agent is going to be your ideation creator. And then your other agent is going to be the writer, and then you're going to have the fact checker, editor, and then you're the, maybe you're the 5th person, the final human in the loop.
Yeah, we're still early days on AI, so there definitely needs to be a human somewhere in that loop to make sure it's correct. Because I've gotten some pretty wacky answers back on asking ChatGPT, but it seems to be getting better. So we'll see where it goes.
I get wrong answers all the time, and I'll like call it out, like, dude, that's wrong. And you'd be like, oh, yeah, you're right. I see that now. I'm like, what? Come on, check your work first.
It's going to be incredible. I'm interested to see where the world of cell phones go, too. I mean, you're the Mac man. So, I mean, do you think we're going to be all having wearables in the future? Or do you think we're going to get rid of this brick we carry around all day with us and just maybe go to some sort of glass?
The cell phone's going to be here for a while. because it's so convenient, and I think it's gotten just a part of our lives. But I think the wearables are going to be this, third device that'll just always be there, always on, always interacting with us, versus a cell phone, something maybe we'll actually pull out when we want to dig into it. So I see the wearable as an always on, and the cell phone as a go-to device that will continue as we want to pick it up.
Yeah, I'm looking at the Meta
Like
glasses.
a laptop and a desktop, similar arc.
I'm not a big earbud fan, as you can tell. So the Meta glasses
we're
have
gonna
been
get
great.
you some.
Yeah, I know. The Meta glasses have been wonderful. I don't like putting things in my ears. It's just like, I feel it's like germy. So especially like if you can just like listen to music through your sunglasses, I think that's like the best way to do it. So,
dude, your Meta glasses were super cool. We used them on the water the other day.
I know they got some great some POV videos recently on the cruise I just took, riding on the back of a pig in the water, getting towed around in the water with a pig.
That was sweet. That was not a pig butchering scam. That was a pig swimming.
Actual pig, yeah. No, I mean, I love them for boating, and because things happen so quickly on a boat, and you see a dolphin pop up, you're not gonna go run and grab your phone. So Meta glasses, wearables, I think that's gonna be like a big theme going forward for tech.
So I think the future of the AirPods is a pretty similar device. So it's almost like people could pick whether they want to wear glasses or sunglasses, or they want something in their ear. Because the future of these, that they'll have cameras and stuff on them, and they'll see what you see. And then they're talking right to you the same way that your Meta glasses do. So I think that's kind of the next generation of the AirPods before we get to the full Apple glasses. I actually just posted a newsletter this last week on LinkedIn talking about the roadmap for Apple's glasses coming up. And 2 years from now, we're supposed to going to have glasses that are pretty similar to what the Meta glasses are doing now. So it seems like we're a little bit behind on the Apple space, and it feels that way too. But they're kind of letting Meta make the market. From what I see, and it's still in its infancy. I mean, they're selling, I think 3 to 5 million glasses or something like that annually right now. So it's small numbers in general compared to cell phones are hundreds of millions. So I think that Apple is just waiting for that right entry point, and then they'll come in when the market's getting a little more excited and the AI is better and fully integrates with your life.
Yeah, I love them. I mean, I don't think they're doing a great job of really marketing them. Facebook, Meta, I'm going to call them.
They don't market them all when you're on Facebook. If I open the Facebook app, I'm actually surprised I don't see ads for them.
I feel like I've sold more Meta glasses than that due to me just telling people that Meta has from advertising, because I show people how cool they are and how they work, and people are like, I didn't know they could do that. I didn't know it could do that. So then they actually want to buy them. You have to try them. I think once you try them, you're not going to not want to buy them.
There should be, Amazon ran a thing a while ago of like, it was like, I think it was for buying clothes or something like that, where you don't pay until like 7 days. And then if you keep it past 7 days, they charge you. So, I mean, it's almost like Meta and other companies should have these like trial periods, like where you order it, technically it's free, and then you return it if you don't like it, or you keep it and you get charged. And like 99% of people would probably keep them.
Yeah, they're not cheap. I mean, they're definitely going to come down in price over time, but they're certainly pretty expensive.
What are they,
sunglasses.
300?
I think more than that. Maybe not much more, but probably right around there. It sounds about right.
Okay, well, I have a prescription. My prescription lenses are over $300, I feel like. So it's like, it doesn't seem that bad.
Well, you can actually put your prescription into the Meta glasses and just wear them as regular glasses. So, which I think is...
That's cool.
Yeah, I mean, because I like it for the music feature. So if you're like working out in sunglasses, listening to music, you kind of look like a weirdo. So it'd be better if you're just like in a regular glasses.
A weirdo or a baller.
Hard to tell.
I mean, down here, I feel like in South Florida, it's normal. Like you're at places that are like people shouldn't be wearing sunglasses, and they all have sunglasses on.
Well, it's sunny, so
yeah.
I mean, you have definitely. Oh, I just disappeared. If I lean back, I disappear into my fictitious bookshelf. Yeah, no, I mean, everything in Florida is sunglasses, golf, boating. You're really falling into the Florida lifestyle. I like to see all your photos of you doing, spear fishing and, taking the boat out and just really falling into that Florida man lifestyle.
Well, you're invited out, man. Let's go fishing.
I've not been able, I've not had the time. You got to go early. So fish are like people. They, now we're turning this into the fishing podcast. You got to go when they eat. You got to go
Well, you don't
early.
get Finmar calls until afternoon, right? So we have the early morning to get the fish, and then the people call you about the broker problems afternoon.
Well, now's a good time to go. At record high, it's like no one's calling me right now. No reason to call.
Best week ever.
Exactly. Although you might have a couple people that, sometimes it's funny because when you get like record highs, people start checking their accounts if they're not doing well, and they start wondering why. And sometimes that sort of that volatility, just the volatility. So even like aggressive moves to the upside, as long as people are start paying attention, start asking questions, start trying to look underneath the hood and say like, well, what's going on with my account? Should I sue my broker? Is he doing the right things for me? Is this self-interest?
Like you mentioned, over concentration, like that would be like, oh, my account hasn't gone up at all, but my S&P's at an all-time high. Like I must have something wrong in my account that my broker recommended.
Yeah, it's funny because like sometimes they really do go rogue. Like we just had a recent case that we filed. It was $750,000 lost in Bed Bath and Beyond, and the firm was actually saying, I won't say which firm, but the firm was actually putting out sell rating the whole time, and the broker is just such a believer. They were buying all the way down to the bottom and even into bankruptcy.
Wow.
Just thinking this thing was going to just turn around and just rock it up. I'm like, man, and it was a pretty big chunk of the client's accounts. Talk about over concentrated and just completely failing to supervise their reps.
You can't go all in a bankrupt company and
that's crazy.
He loved it so much all the way down, buying all the way down, even in
I almost bought some, and it was so far down because I was like, oh, I saw that the fluctuations. I was like, oh, there's a little bit of time to kind of play the stock here.
Well, I think there was a moment where it became a meme stock, so maybe they were betting on some kind of short squeeze or something like that, but it just really was not appropriate, especially going against what the firm's own recommendation is. I mean, that broker really was going rogue. So hopefully that'll be a string of interesting cases, because apparently
wild.
It wasn't just a recommendation to one person. It was pretty much like a wholesale recommendation across the board to all of his clients that Bed Bath & Beyond is going to be the future.
You're like, dude, it's literally going under. Like, what are you talking about?
Yeah,
there's nothing you could tell me to make me think that's a good idea. There's not. I mean, just how I analyze my week to week month. Like, I am 30. I've went to Bed Bath and Beyond 0 times. So, I think the chances are going to increase? No, absolutely.
I can't even think of a time.
Whatever they sell, Amazon.
I must. Probably the only time I went to Bed Bath and Beyond was probably like 25 years ago, sitting up a college dorm or something like that.
Right.
But I can't think of one singular time where I actually went to Bed Bath.
That is when we shopped there back at college. I was like, oh, I remember I made a Walmart run and a Bed Bath Beyond run.
Exactly. Keeping that dorm room fresh.
Yeah. All right, so if anyone out there is listening and their broker is recommending stocks that are absolutely sinking and in bankruptcy, it is time to call Lars.
I think like a universal truth is if you're being recommended companies that are in bankruptcy by your stockbroker, you should probably call a securities lawyer to discuss whether or not you have a case.
Yes,
that would be like one of the first red flags, I would say. If it's actually trading on the pink sheets as a bankrupt company, that's probably not a good sign.
We're about to wrap this up, Lars, but I want to make sure everyone knows exactly how to get a hold of you. How do they find you in the future and connect with you online?
Yeah, thanks, Brian. So the easiest way that people find me, of course, is securitieslawyer.com. You just fill out a form. I'm very responsive. You get a call that day. You can call the office.
Love it.
888-760-6552. You can message the Mac Man, and he'll give you my personal cell number.
I will. What about your blog? That people want to read your blog. Where do they find that?
Yeah, that's actually, you can get to it through securitieslawyer.com. So there's a link right on the page to the blog. But we're doing about 25,000 words a month on it. So there's a lot of content on the blog.
Nice.
That means unfortunately, that means there's a lot of disciplinary action. We're probably doing about 3 or 4 blog posts per day.
Okay.
Wow.
That's a lot of content.
Yeah, it's a lot of content. a lot of really interesting, really highly qualified copywriters that are, sourcing the material and turning it into, news stories for the public to read about so they can see what's going on if they're looking up a particular broker or a particular bad product. So there's never a shortage of stuff to write about, unfortunately.
There's probably an article about Bed Bath & Beyond on there, I bet.
There is. Anything we do, we write about it. I mean, it's just such a weird business I'm in, because sometimes people call me and they've just absolutely been ruined, and they're just horror stories. And then they say to me, and they're like, "Man, I didn't even know I could sue." I'm like, "Well, your broker's largely your fiduciary, and you're supposed to put your interest ahead of his." Yeah. And the market's gone up 50% and you're down 50%. I mean, maybe you should have looked a little sooner. So, but yeah, I mean, they have 6 years to figure it out. That's the window they have to file. So sometimes, we don't get a call for several years. Yeah. It's a long statute of limitations in the FINRA forum.
Wow. You can be upset for that long and then decide last minute, I want to sue.
Well, yeah, like I was saying, like oil and gas cases. I mean, even though oil and gas blew up, I think in 2015, if I remember correctly, I mean, we're still filing those cases up to 2019, 2020, 2021.
You can milk it for a while.
Well, it takes a long time for people to realize they have a case. They don't even know it's a thing. So, and especially they think it's going to cost a fortune. I mean, everything we do is success-based pay. It's contingency fee. It's a third of whatever we recover. So we recover nothing. You don't pay anything. So I always tell people, I mean, we take all the credit risk.
No risk. You go fill out the form at securitiesLawyer.com. Either you win and get.
You can't lose the money twice. Either I'm going to get you a check or I'm not. So you're not throwing good money after bad. You're letting us.
That's a great tagline. You won't lose your money twice.
Won't lose your money twice. It's already gone. So let's see what we can do for you and your viewers. So hopefully, if anyone's out there that has an issue, they do call me. But we're looking kind of for a needle in a haystack. You have to have a broker. You have to have a significant loss within the last 6 years, and something that's not a market loss, something that was way outside your risk tolerance, way overly concentrated, some complex product that the brokerage firm invents that blows up. So, there's a lot of different criteria that make a case. So
someone out there might be listening. We're going to pop this on our YouTube Shorts. It gets tens of thousands of views on there. So
yeah, I love it.
We're going to find that next client.
Well, come find me on securitiesLawyer.com, and I'll be happy to talk to any of your loyal fans and listeners.
All right. Well, thanks a lot for coming on, Lars. You were a great guest. We appreciate you. And thanks for everyone for tuning in for another episode of Bullish and Beyond.
Thank you, Ryan. Thank you, JT.
Cheers, everyone.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps, and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.